Welcome, everybody, to the next episode of the Cannabis Review. I'm delighted to be joined on this episode by Jesse Redmond, who's the founder and managing partner at Calling LLC. How are you keeping today, Jesse?
I'm doing great, thanks. How are you?
I'm fantastic. Thank you very much for coming on. I've been following your Twitter landscape for a number of years or a number of time now. So can you maybe give everybody a quick overview in under 60 seconds of what your position is and how you came to be in the cannabis industry?
Yeah, so I've had a bit of a strange career where I spent 20 years on the investment management side. I worked at Fisher Investments and Franklin Templeton in San Francisco, and then I co-managed a couple of hedge funds in Santa Barbara. In 2016, I put aside the investment stuff and started focusing on cannabis and founded a dispensary outside of Santa Barbara. I did that for about 3 years, and then for the last couple of years, I've been focusing on blending that cannabis and investing knowledge.
Okay, great. It's been interesting to watch the Twitter MSO investment community, shall we say, gather over the last year and the positions everybody seems to be taking. Do you maybe want to give every brief little overview of the Higher Calling LLC? What is the objective with your firm and what you guys do?
Yeah, so that's an investment consulting business that I started in 2020. And the idea there was just to help investors find the best and most appropriate cannabis investments for them. And so for some people, that may be a portfolio of individual stocks. So things like Green Thumb Industries and Curaleaf and Verano and Trueleaf, individual names like that. Or for other folks, it could be a venture capital fund. There's a number of good venture capital funds out there that invest in earlier stage businesses. There's also some great hedge funds out there for people that are qualified and interested in vehicles like that. And there's also some excellent ETFs as well. And so I think there isn't, like a lot of investing things, it's not about there being one best solution. It's about understanding somebody's needs and objectives and then fitting the right solution for them. So that's what I try to do with Higher Calling. That got started with some larger family offices that I worked with on the hedge fund side that were interested in getting cannabis exposure, but didn't want to do all of the work themselves. As you probably know, it's a bit of a complex and nuanced space due to the state by state regulations. And that doesn't even account for the differences between Canada and Europe and everything else. So, cannabis is a bit of a difficult space to navigate. So some people want to outsource that responsibility. That's how that got started. And they've just been building it out from there.
Amazing. Yeah, it's great to see the position you're taking and the audience and influence that you're gathering in the industry. The topic of this episode is basically how to invest in cannabis. And I just want to kind of maybe give everybody a quick little overview of a couple of different ways and models and methods that regular people can get into investment in cannabis stocks, because it is definitely a medium to long-term play that everybody should be looking at if you're interested in this industry. So first and foremost, what platform would you use to invest in cannabis stocks or to purchase cannabis stocks? Is there a specific cannabis-based one, or is just a regular platform that investors use?
Yeah, so it's a little bit tricky. There's a nuance where the US cannabis, the plant touching businesses, can't trade on things like the New York Stock Exchange and the NASDAQ. And so the US companies go public in Canada and then have dual listings on the OTC exchange. So if you want to invest in US plant touching operators, names like I mentioned earlier, Green Thumb Industries or Curaleaf, which I think are some of the most compelling opportunities, you need to have a brokerage account that allows you to allow access OTC names, or B allows you to access cannabis stocks. And so one easy solution for that is Fidelity, and that's what I use for a lot of the things that I do. There are other platforms out there like Robinhood, which is a big retail platform in the US, and they don't allow purchase of these OTC cannabis stocks. So it's really a broker by broker decision. I think partially based on what they see as the demand, and partially some still see some regulatory risk. We hope to get safe banking last fall. That didn't happen. And I think until we get safe banking or descheduling or rescheduling, some of these brokerage platforms and custody platforms are still going to be a little bit nervous about cannabis stocks. On top of that, you could buy the OTC names, like I mentioned, but there's also great options for ETFs. One we hear a lot about is like the MSOS ETF, which is the largest ETF in the industry that provides access to US, basically broad access, almost index like. It's not an index, but it's index like exposure to US cannabis stocks. I also personally invest in the ETF, the Poseidon Dynamic Opportunities ETF, which has the ticker PSDN. And I like that one because I think it has a little bit more experienced team on the cannabis side and a more focused portfolio. And the ETFs use swaps to get access to the OTC names. So because they don't actually hold those underlying names, they can be listed on the higher exchanges. So things like the ticker MSOS and the ticker PSDN, you are able to buy on more platforms than you can the actual underlying individual names like a GTI or a Cureleaf.
Okay, amazing. Great information. So let's say somebody realizes they found the platform that they want to be able to invest in. How do you specifically pick your strategy towards acquiring specific stocks? Is it cash balance sheet? Is it assets that they own? Is it future earnings that you think that's going to come in the door? Is there a couple of different parameters that you would set that all investors should be using, these one or two different, or one or two, three different parameters to judge what to purchase? Or is it basically just research, research, research?
Yeah, it's a little bit of all of the above, but I always think of cannabis first and foremost as a state-led growth story. And when I say that, I mean we have 21 adult use states today, so that leaves us 29 more to go. And each state has its own regulations, which can be complicated and pretty specific to that environment. So you have states like New Jersey, which are excellent states for the multi-state operators, high margins, limited number of stores, limited number of licenses. Curaleaf has a store in Belmar, New Jersey that's on track to do $72 million in sales this year. So there are huge stores in New Jersey. New Jersey is a great environment. So you want to get as much exposure to those limited license states, especially ones that just moved from medical to adult use. You contrast that with where I live, which is in California, and California is a very challenging state for cannabis operators. We don't have enough stores. We have too many cultivation licenses, and there's a mismatch between supply and demand. We have about 1,000 stores here today. We need closer to 5 to 10,000 to be healthy. And so when you're looking at investing, you could have a great business and a great idea like Glasshouse Brands. However, if you put them in the most challenging environment in the US, it still is going to be difficult for that stock. On the flip side, you have states like California, which I don't make dedicated investments in, but usually with these multi-state operators, let's keep talking about, Green Thumb, for example. If you want to get exposure to New Jersey, which they have, you have to take some other states along the way. So those bigger blue chip names are often in 5 or 10 different states. And if you want New Jersey, maybe you have to take an Arizona with it, which is more challenging, or Massachusetts, which is more challenging, or Michigan, which is more challenging, or California, which is more challenging. So it's about understanding where those exposures are at a state by state basis and investing on what you think are going to be the best environments. So that's number one, is focus on the states. Number two is you have to understand the climate that we're in today. If we got safe and lending opened up and investment opened up, then I would say it may make sense to dip into some of the smaller operators with more debt laden balance sheets. However, we didn't get safe. We're probably in a recession in the US and interest rates are really high. So under those conditions, I always think back to a conversation I had with the CEO of Ascend Wellness, Abner Curtin, who said it's not about finding the stocks right now that'll go up 200% rather than 150%. It's about avoiding the ones that are going to go to zero. And I think about that almost every day because in this environment, there's so much opportunity in cannabis because the prices are so depressed and we have this series of catalysts ahead of us. But you need to be in the ones that can survive today and thrive tomorrow. So on top of that state by state component, I would focus on stocks that have scale. I would be focused on stocks that have strong balance sheets without too much debt. I would be mindful of near-term maturities because it may be hard to refinance those in an environment like 2023. And I would look for businesses or multi-state operators that have exposure to expanding markets. So Connecticut's just turning on. New York is just turning on. Rhode Island is just turning on. We have Maryland and Missouri turning on later this year. So in today's environment, I think it makes more sense to be a bit more conservative, focus on the more blue chip names with the more sound balance sheets, but do that being mindful of what states you're in and also trying to get exposure to new states that are opening because newer states typically have greater margins and more revenue per store when they first open.
Okay, incredible wealth of information there. Do you see a market at the moment? Do you actually, first and foremost, do you think that New York is ever going to catch up with California in terms of size of market, or is California always going to be the leading state in America?
I think that demand-wise, it could be right there. New York is a big state, has a lot of cannabis culture and consumption over the years. So I think New York will be a strong state. I think from a cultivation perspective, California's climate is just so much better that people will argue about this. But California, I think, will still be the leader in terms of innovation and quality in cannabis. And maybe one day we export stuff to New York. If we ever get interstate commerce, I think that's probably going to be a big thing. Because if you go to these illegal bodegas in New York, they all feature California products because that's ultimately what consumers want. So I think New York is a good opportunity. The initial regulations don't look super favorable to the multi-state operators in that they can't open their first adult use store until 3 years after any adult use stores open. So they're essentially giving the social equity operators a big head start there. Probably a decent cultivation and wholesale opportunity to feed those social equity stores. But I think that broadly speaking, that the initial regulations have not been real favorable for the MSOs. And so I think that people that have assets there, like your Crescos, like your Curaleafs, I think they've been a little bit disappointed in the initial drafts, but maybe those things will change. Otherwise, it just may take a few years for that to be a real profitable market.
Okay, very interesting. Do you see a market for things like distressed assets because with the uncertainty in America, do you think that there's actually a position to acquire distressed assets and for that to be a workable option?
I think it is, but you have to think about why is it distressed. And so if you're in a state like Michigan with too much cultivation and and you are a grower in Michigan and you're losing money and it's really cheap to buy it, well, you might just buy it and keep losing money. And so I think you need to be careful about which distressed assets that you're buying. I think that cultivation in and of itself is not a very interesting thing to buy these days. I think retail is more interesting, or even better is vertical integration, where you pair the retail with the manufacturing and distribution and the cultivation because they have higher margins and that gives you greater control of the supply chain. So I think there are select distress opportunities, but you also have to ask who has the money these days, right? Um, in this environment where you don't want to do an equity raise because your share prices are so low and the cost of capital has got so high. Like Glasshouse Brands did a raise preferred deal that was 20 to 25% interest rates with a couple of warrants. And so if you need to borrow money at 20% to acquire distressed stuff, A, that's a high cost of capital, and B, I think you want to be real selective in terms of which assets in which you would invest.
Yeah, very good. One of the things I wanted to mention was Green Giants, and I had come across it, and I think it's been a great wealth of knowledge and information. Do you want to give maybe a quick little overview of Green Giants?
Yeah, that's a website I started, I guess about a year and a half ago. And initially, it had a feature where you could there was a premium service. We could pay for portfolio positions and trade updates. Ultimately, the payment provider canceled that option because they didn't want people paying for cannabis-related content, which makes no sense, right? I'm not selling cannabis; I was selling information about cannabis stocks. But that's the world we live in with cannabis. So that feature went away, and now I just treat it as a place to share things that I write and share interviews that I do. So there's about 60 different articles there, and lately I've been doing a bunch of interviews with different investment managers in the space and different operators in the space. And so it's free to subscribe. People can check it out, and if you want to learn about the invest in cannabis, that's really what it's for.
Highly recommend everybody checking it out and going to visit the website. The last thing I wanted to touch on before I let you go is, do you see as a North American investor value in European cannabis stocks at the moment, or are you still a number of years away from taking a position?
Yeah, I think Europe is definitely interesting, especially as a diversifier. I think expectations may be a little bit high because the one thing I've seen over and over in cannabis is things take longer than we expect. And so there's a lot of optimism around Germany. I recently sat in on a call with a couple of German experts, and they were 50-50 on whether we would see sales in 24. So if not 24, for sure 25. So if Germany turns on in the next year or two, I think that sounds like a pretty interesting opportunity. And just like we see in the US, when one state turns on, often the neighboring states do as well. So I think we could see that in Europe as well. If Germany falls, then we might see other countries across Europe turn on as well. So yes, I think Germany is definitely an interesting opportunity in and of itself, but also a great way to complement a US based portfolio. So if you own some of the big MSOs or a few of the single state operators, go ahead and add some European exposure to diversify. Just like in normal stocks, a global portfolio is often better than just a US only portfolio, higher risk adjusted returns, more opportunity, less volatility. I think those same conditions apply to cannabis stocks. And so I've mentioned Curaleaf earlier, and they're one of the few US MSOs that's really dedicating themselves to Europe. They do have a German business that they acquired. And so you could get that through someone like Curaleaf. Otherwise, if you want to hunt around for specific opportunities in Europe, I think that's definitely a good idea.
Yeah, for sure. I think Europe is going to lead more with biotechnology and biosynthesizing cannabinoids than actual cultivation, because the industry is just set up completely over here for that to be able to be facilitated. It's been phenomenal talking to you. I couldn't recommend everybody checking out Green Giants and following Jesse on Twitter at Jesse Redmond. Very much appreciated, Jesse. Thank you very much. And hopefully we can touch base towards the middle of the end of the year and get an update and see where the stock positions are.
That sounds great. This was fun. Thank you for having me.
Thank you very much, guys. Until next episode.